Hello, real estate investing fools, and welcome to another Millionacres Spotlight. This week, we're talking about one of the toughest topics for investors, especially commercial real estate investors, and that's commercial real estate financing. So my guests today are Dan Gorczycki, the managing director of TrueRate, and Cooper Ramsey, who's vice president at TrueRate. They both had long careers in the lending space. They've seen some of the changes in commercial real estate lending, ways it hasn't changed, and kind of the ways it needs to. So, Dan, let's start with you. With residential real estate, it's pretty easy to shop for a loan. It's less of the case with CRE so far. So why is that?
Well, I think for residential, I think people, if it's their first home, let's say, they don't have a banking relationship. So they sort of are starting from scratch. So they have no choice, but and in many cases, even try to figure out if they qualify for a loan if they're buying a house that's a bit of a stretch for them. So it's more like out of not having a choice that they're accessing the lending markets beforehand. While in commercial, usually, unless it's a first-time buyer, he already has a banking relationship of some sort, or he has a mortgage broker buddy that he golfs with, let's say, and that he trusts. And so they sort of do it sequentially where the mortgage, they won't think about that until after they're already in contract. So, yes, they should be thinking about it much earlier in the process, but they just don't.
Well, I think that's interesting because you've mentioned something that there really sort of isn't that debt marketplace for commercial. So, Cooper, why is TrueRate doing this, and what are some of the challenges with building this system?
Yeah, so, the marketplace model, we've seen it work in other industries, right, to educate the consumer on all the available options to them, right? Commercial real estate lending is a pretty closed-door business traditionally, and we're looking to dismantle that through the use of our online portal, where borrowers can simply log in, enter their deal information, and then it's sent on the back end to a multitude of different lenders with different types of executions. So, they're able to really sort out and weigh the pros and cons of each different execution to see which one really matches for their business plan.
So, Dan, you guys have been around for around a year. Not the easiest time to start a business, but how's the reception been so far?
Well, we've been thrilled by the reception so far. I mean, anybody who has been to our website and has accessed the portal is always very complimentary about how easy it is, how seamless it is. We sort of walk you through the different steps as to how to upload your information, and you get relatively quick response from the lenders on the other side of it. At the same time that we're doing it, yes, we're still doing some of it the old-fashioned way, where in some cases it's something where a property they're just looking at, where they will still call us before they access the portal because they don't have the financials or so forth. But everybody that has heard about the idea, has seen our website, seen our portal, realizes it's the wave of the future and something that they're going to want to use going forward. Interesting.
Have you had some problems with people just sort of learning to adapt to this new environment? Because it is really different for commercial to kind of think of things that way.
Yeah, well, certainly if you're a smaller property buyer and you don't have a banking relationship, you're more apt to want to go this route to sort of get a menu of options. Yes, if you're an institutional player, you think you already have all of your lending relationships, but everybody's always pleasantly surprised that they didn't see the full market. They didn't see the 40 or 50 lenders out there. They only had their circle of 4 or 5 people. So more options means better pricing, better execution for the client.
That makes sense. One of the things that I've heard about the CRE loans, we've talked about it on the Millionacres website a lot, is how much time it takes, how much paperwork's involved. On the residential side, they're trying to streamline that so much more quickly. It's so hard with commercial. So, Cooper, how does TrueRate kind of speed up the loan process?
Yes. So, there, like you mentioned, there is a lot of paperwork associated with closing a commercial real estate loan. But truthfully, it really doesn't have to be that much of a tall task. So what we've done is provide a timeline with steps and required documentation from the beginning of an execution, right when it's entered through our portal, all the way until closing. And so we're really speeding up the process by getting all of the lenders the same information up front, right? So no one has a competing edge and is making a better quote because of that. So that allows for quick decision making in choosing your ultimate lender. And then we have additional document submission tools where a borrower can safely and securely pass their personal information, their property information, and gather third-party reports and get them to the lender quickly and efficiently.
Interesting. So what terms is TrueRate looking for? Is it being evaluated by an algorithm? Does it vary by loan type?
So, TrueRate, we handle all sorts of commercial real estate loans. We'll take, anything from your $1 million, duplex acquisition up until, the 9 digits. But, what we're really evaluating is all the terms of the quotes that we're receiving from our lending partners, and ranking them according to what's most important to the borrower. So what we've done is actually allow the borrower to choose what's most important to them, whether they want a high loan to value, a lowest rate, the most interest only, years within the loan term, and they can simply just rank them according to their preferences.
Excellent. So do you handle bridge loans, mezzanine financing, things like that?
Yeah, absolutely. We do the whole capital stack, including preferred equity too. There's a little more of a challenge with mezzanine and bridge simply because usually you're taking a property that's in transition where there's a real heavy value add component. And a lot of times that can't be communicated through the portal. They could submit a formal business plan if they have one, and that's very helpful if they do, because then they can get quick response. But usually it's especially if it's one where it's an acquisition, it's sort of a informal ideas in their head that need to be communicated. So our software developers and us are figuring out ways to streamline that and make that conform so they can get quick bridge loan quotes just like they get conventional loan quotes.
Awesome. Well, let's talk about the lending environment over the last year. I know commercial real estate slowed down a lot in 2020. It started to speed up again. We're definitely seeing more deals. Are the lenders more cautious? Are you seeing them wanting people to jump through more hoops?
I think the COVID-19 pandemic was a really interesting time to be in real estate finance, right? We saw the markets pretty much close up completely. Even Fannie and Freddie were, pretty much at a standstill for a very short period at the very beginning of the pandemic when it came to the U.S. But then the Fed started purchasing large amounts of debt securities, which provided liquidity in the markets, and interest rates fell. So it was a very opportune time for a lot of real estate investors to refinance their properties into a nice low rate with permanent financing solutions. So, but lenders have kind of opened the door to asking more questions to thoroughly vet, the viability of these projects if we were to experience something like this again. I think kind of the most clear example is with mixed use assets where we've got 4 floors of multifamily and then ground floor retail. The commercial or retail component of those projects have opened up a new line of questioning so that, in case we were to experience something like this again, we can make sure that property operations will continue to be ongoing.
Do you feel like we're going to see a slow rise in interest rates? There's been a lot of talk about that. Is that something you're watching pretty closely?
It is something we're watching very closely. There's been a lot of signals about increased inflation, and trying to find the most optimal time to lock in a low interest rate before inflation really picks up. And we see that, carry through into commercial real estate loan interest rates. So yes, we are monitoring that very closely.
Well, let's walk through a recent deal that you did. Dan, I saw that you did a $9.3 million refinancing loan for a mixed-use development deal in Georgia. Tell us a little bit about what that deal was like.
Yeah, so that was a deal in Covington, Georgia, which is the fastest growing suburb east of Atlanta. And it was a master plan development where they had already done the heavy lifting. They had put in the infrastructure. They had, put in a Publix supermarket. There was a hotel under construction. But the last piece was sort of the the most valuable piece to the developer was selling the out parcels to, a lot of the retailers, everything from a dental office to to fast food to so forth. So that was where sort of his profit was in the last stage. But at the same time, it's still land, and a lot of lenders are hesitant to do land. And if the market were to turn, they don't want to be, taking that back or, having that hang out there. So, but there are lenders that said, hey, I can get some yield. I can get high single digits. And I see that this is, a development that's successful, and I want that yield. So we were able to put not only the winning lender, Thoroughfare, but others into competition to compress the spread, get the best deal for the borrower in terms of low interest rate and high proceeds, take out his, hard money loan, acquisition loan, and it was a win-win all around.
Cooper, I wanted to ask you, we talked about Fannie and Freddie a little bit earlier, a lot of conversation about the conservatorship and them, their position as GSEs. Do you feel like that's going to change anytime soon, or are they going to stay as they are?
So I believe that they're going to stay as they are, and I think a clear kind of sign that would indicate that is that the Biden administration is replacing the head of the FHFA, right, whose main goal, he was a Trump appointee, whose main goal was to privatize Fannie and Freddie. And I think this current administration is taking the affordable housing crisis very seriously, and Fannie and Freddie's mission is to provide, workforce and affordable housing across the nation, and to maintain liquidity in those markets. So, I think with this move, it was a clear signal that Fannie and Freddie will remain in conservatorship for the foreseeable future.
Well, let's wrap up. And Dan, I wanted to ask you, at the beginning of this interview, I mentioned that commercial real estate financing probably needs to change a little bit, get more with the times, which I think is what you're doing at TrueRate. So you've been involved in lending for over 2 decades. You've seen a lot. What has changed, and what are you trying to change?
Well, I hate to say it, but it's actually been 3 decades. But it's been since the crash of 87. As I tell people, not the crash of 29. It was the crash of 87. And basically, what's changed is whether it's an up market or a down market, people still need to refinance. And so early in my career, it was pre-internet. So basically, if you knew about a couple of insurance companies that were lending at very low coupons, that information was gold. Well, that information is now disseminated on the internet, and a lot of people think they could do it themselves. But the problem is, with lenders having 100 deals on their desk and, us being able to put them in competition with each other, that's what has to change, is basically a portal where everybody could access it. Everybody can get that same competition, that same absolutely best execution that somebody extremely knowledgeable in the business can get. So no longer do you have to just go to your one bank that you've been doing business with for 20 years. Now you can absolutely access everybody in the market, know that you got the best deal. I mean, people will negotiate to the nickel for the purchase price of the property and capital expenditures and repairs, but they won't negotiate for every nickel on interest rate and fees and so forth. And that's our job. We do that for the borrower. We hold his hand right from the beginning all the way through the loan documents.
Well, I love that. I think competition is always good for business. Well, thank you so much, both of you, for your time today. Investors, you can learn more at TrueRateServices.com. Stay well and stay invested.
Thank you, Deidre.